Good morning. We will start the morning call. US markets were down on Friday. S&P 500 was down 1.7%, while Nasdaq was down 2.7%. However, both these indices are up in futures this morning. Most of the Asian markets are down around 1%. China CPI remained in the deflation zone and declined by 1.8% in August. In US, when the Fed meets next week, expectation is that there is a 33% chance of 50 basis points rate cut. However, consensus remains for a 25 basis points rate cut. Oil prices found some support after suffering their biggest weekly fall in almost last 1 year, and that was mainly because of declining global demand for crude oil. However, this morning Brent has bounced back by $1 and currently at $72 per barrel. Thank you. I will now invite the technical team to take the call forward.
Thank you, Jihan. A very good morning, all of you. Talking about Nifty has formed a negative RSI divergence on the daily chart. Nifty has taken a good support of the 20-day moving average in yesterday's trading and Friday's trading session, which was at around 24,820 levels. So the important support zone stays at 24,800 levels. If that is broken, then Nifty might test 24,600, which is its 50-day moving average. So taking the cues from the global market, we're expecting a negative move. So since we can expect some range-bound move in today's trading session, where the important support zone is at 24,800, if that is broken, then we will test 24,700 to 24,600 levels. Whereas on the upside, 24,930 will act as a very important resistance zone, followed by 25,000. Talking about Bank Nifty has broken its 50 and 20-day moving average in a single trading session on Friday, making it more weaker. The downside support for Bank Nifty is currently placed at 50,370, which is its 100-day moving average, which Bank Nifty hasn't tested since the election day. So that will act as a very important support zone for Bank Nifty, followed by 50,000. If that is broken, then 49,740 is on the cards. Whereas the upside resistance for Bank Nifty is currently placed at 51,000. If we expect a closing above 51,000, then Bank Nifty can inch towards 51,340 levels. Talking about Fin Nifty, close around 23,600 levels. The downside support for Fin Nifty is at 23,540 and 23,440, whereas the upside resistance is 23,740 and 23,850. It's going to be a very stock specific market. We are liking Kala Mandir at the current price. Can be bought for targets of 190 by keeping a strict stop loss of 177. So that's all from my side. I request Nirav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, the data points to some more selling pressure at this point. Open interest remains high. The VIX continues to move above, going up above the 15 levels now. The only real positive thing is at the PCR, where you've seen the 25,000 strike PCR continue to remain above one, even though Nifty closed below the 24,900 levels. So that is a positive. Also, the overall PCR is below one. So yeah, I mean that denotes some support area. So probably we can see some amount of selling in the near term, but we might see some buying coming in from 24,700 odd levels, which seems to be a good support area. But as of now, for next couple of days, we can see some selling. The calls also saw aggressive build up of open interest from 24,800 to 25,500 odd strikes. So that also denotes negative bias. From the stock specific front, defensive stocks saw good buying, especially pharma and IT. And we expect these sectors to continue to witness some more buying going forward. With good buying going on, we expect Divi's Lab to do well going forward. Good pattern is there on the charts, and also the open interest profile for the stock is positive. We expect this stock to do well going forward. Yeah. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah. Today, today Bajaj Housing Finance IPO will be opening, and it will close on 11th of September, which is Wednesday. We have given subscribe rating. Issue price is 70 per share. Market cap post issue will be 58,000 crores. And they are raising 6,500 crores ballpark. 3,500 crore will be fresh issue, 3,000 crore OFS. Um, so the company was started in 2018, so it's a relatively new company in the HFC space, which is housing finance companies. And within this short period of time, the AUM has reached 97,000 crore, and the company has become second largest after LIC Housing Finance. The core home loan segment makes up 58% of AUM, and LAP forms 10%, while the remaining 32% is made up of LRD, which is lease rental discounting, and developer book. In core home loans, the average ticket size is 46 lakhs, and CIBIL score of customers is 750 plus. So essentially, they are competing against all major banks and catering to the prime segment of customers. So this is a highly competitive segment, and still company is able to do well. Basically, four positives which are going well for Bajaj Housing are the brand name of Bajaj, and secondly, the parentage is providing the company highest possible credit rating, which allows it to raise funds cheaply, and hence it is able to compete in the market with low cost of funds. Loan growth in last 2 years is at 31% CAGR, while if you see the listed companies, most of the housing finance companies as well as the housing segment of all banks is able to grow at around 14-15%. If we exclude the fast growing developer and LRD segment, still the core home loan book has been able to compound at 24%, which is faster than the industry. Lastly, its asset quality is best amongst all listed HFCs with net NPA of barely 0.1%. Issue price is at translates to price to book of just 3.2 times, which is similar to the peer average. So among peers, we have taken not only HFCs like Canfin and PNB Housing Finance, but also other affordable housing finance, considering that those affordable ones are growing at similar pace that Bajaj is growing at. So that's why we have taken them also. And overall ROE for all the listed players is somewhat similar, closer to 15%, including that of Bajaj. However, we expect Bajaj to command premium upon listing, mainly because of superior growth and asset quality performance that it has displayed. That's why we have given subscribe rating. Another company, Gala Precision Engineering, will be getting listed today. IPO had opened last week. This company manufactures disc springs, which is 60% of revenue, and is a traditional business which has a limited addressable market and is growing slowly. That is why in 2015, Gala entered into new products of coil springs and spiral springs, which is 20% of revenue today, and is mainly used by auto sector. These are not the basic commodity kind of springs which are used in two-wheelers, but more of products which are competing against European companies which are being imported currently. So this market of coil and spiral springs is also 4 times that of the traditional business of disc springs. And the third segment that the companies entered in 2019 is special fasteners, which contributes to 20% of revenue, where company makes nuts and bolts for sectors like wind energy, railways, heavy machinery. Again, these are not commodity products. Companies knowingly entered this market because these are all import substitutes, and company has a considerable market share, especially in the wind energy, the wind turbine segment, where it provides these nuts and bolts which were earlier imported. And this fastener segment is the fastest growing segment for the company. If we see industry-wise exposure, then industrial segment makes up 40% of revenue, while wind turbines is 30%, and automobile and railways remaining 30% mix. Export contribution has been constant at 37% mix since last few years. Over the last decade, Gala has, as I discussed, strategically moved up the value chain and expanded into new products where having larger addressable markets and import substitutes. This is also reflected in its robust revenue CAGR of 18% over last couple of years, compared to single-digit growth for other listed bearing companies and fastener companies. Because of the high entry barrier, lengthy approval, there is Gala is able to come on slightly higher EBITDA margins as well at 19% compared to peers at 16-17%. So based on this positioning of the company, ability to move into new markets, grow at a faster rate, command higher margins, we think that valuations of 28 times FY24 is attractive for Gala, and it should command premium to this, and accordingly, as per sources, it is expected to list at a 55% premium to the IPO price today. Thank you.
Good morning. We attended Capital Markets Day of Fanatics Chemical on Friday, in which they have touched upon their long-term vision across segments. Just to give you a brief on the business model, the company caters to textile segment, which contributes 60% of its revenue, and secondly, cleaning and hygiene segment, which contributes 40%. Recently, it has also forayed into drilling specialty chemicals for oil and gas. The management highlighted that textile segment enjoys higher margin across all its segments, and in textile segment value chain, products from finishing process enjoys higher margins, and that contributes 60% of its segment revenue. Currently, it aims to sell entire packages to its customer that includes products from pre-treatment, dyeing, printing to finishing process. In cleaning and hygiene, it operates mainly in two categories, such as institutional category and solutions to major FMCG players such as Patanjali, Ghadi, etc. In oil and gas segment, the management expects maturity in its business over the next 3 to 4 years. Currently, it is in talks with the few companies with respect to its inorganic growth, and it will focus on the Middle East and other key international regions, selected regions. While it will continue to maintain its position as a sustainable and customized solutions provider across its segment, it is more positive with respect to Europe plus one strategy, as European players are finding it difficult to operate due to high cost of production. And the same is expected to benefit the company as they are engaged in the production of sustainable solutions with all the required certifications in terms of quality. We had recommended this stock as our stock pick for the July month at 385 levels, and the company has delivered the strong performance over the last few years and has reported the strong return ratios of ROE of 30% and ROC of 22% in FY24. The management has ensured similar level of performance to be maintained in the years to come. The stock is trading at a PE of 24 times to FY26 EPS, and we recommend to buy or add at these levels. Thank you.
Good morning. So there is news about Infosys going on rounds for a couple of weeks, wherein the IT labor union had filed a formal complaint against Infosys to the Ministry of Labor. This is related to the delayed onboarding and unprofessional treatment of more than 2,000 engineering graduates who were selected for various roles during 2022 and 23, but were not onboarded. However, we also learned that Infosys has begun sending the joining dates to the affected engineering graduates who have been waiting for onboarding for almost for the past 2 years. So, provided the company may comes out with good revenue numbers, EBITDA margins should not get affected. So one can accumulate the stock for a long-term benefit. That's it. Thank you.
Good morning, everyone. So today, one another IPO is coming up, namely Cross Limited. Price band is 228 to 240. Market cap post issue is around 1500 crores. We have given a neutral rating to the IPO. The issue size is around 500 crores. Around 250 crores is a fresh issue, and another 250 crores is OFS. The fresh issue proceeds will be utilized for capex around 70 crores, repayment of borrowings around 90 crores, funding working capital requirements approximately 30 crores, and balance general corporate purposes. As far as the background of the company is concerned, the company is a diversified player focused on manufacturing and supply of trailer axle and suspension assembly, and a wide range of forged and precision machined high performance equipments for medium and heavy commercial vehicles, M and SCV, and farm equipment segments. In 2019, it commenced manufacture and sale of trailer axle and suspension assemblies, and have witnessed robust growth between fiscal 21 and 24. The company mainly caters to MNSCV and farm equipment segments, and the leading customers of the company include Ashok Leyland, Tata International. The revenue mix is for fiscal 2024 around 88% from MNSCV segment, which includes trailer axle and suspensions, around 9% from farm equipment segment, and 2% from other components and services. As far as the strengths of the company are concerned, number one, strong financial metrics. The company's revenue has grown at a CAGR of around 44% from FY22 to 24 versus an industry average of 19.3%. The company's ROCE and ROE are also higher at 28.8% and 30.6% versus an industry average of 22.5% and 18.4% respectively. Secondly, it has strong backward integration. The company is backward integrated with design, process engineering, forging, casting, and machining capabilities, which allows it greater control over process, timelines, pricing, and quality. And it has also helped in improving its operating margins. Thirdly, it has strong in-house expertise and also has got export opportunities. The company has developed in-house design capabilities, which have been instrumental in its success by allowing it to work closely with customers for design and development of these components. And due to its track record, it has been able to attract export opportunities such as a Liex company, which is a Swedish auto component company, and a Japanese OEM. And it has also commenced its bulk exports to Liex in August 2023, with supplies of universal crosses and in stages of validation for other critical parts. As far as the valuation is concerned, the company is currently valued at 34.5 times TTM versus an industry average of 26.2 times. Although the company has decent financial metrics, good in-house expertise, and strong growth prospects, we still think the valuations at this stage are slightly expensive, and hence we recommend neutral to the issue. Thank you.
That's it from us. Thank you for attending.